Hi, I'm Wei Min Tan. I'm a Manhattan property agent, and this is our May property market update. This is the opening slide, and this is the most recent deal that we did, and we represented the seller and got multiple offers and ended up signing the contract at above asking price. So there are two key points that I'd like to share. Number one is to buy the right property, because when you're selling, then you wouldn't have a challenge selling at all. Number two is to have a great team. This apartment was staged, and staging really accentuates the functionality of the apartment because it brings out how we can use the space. And when the buyers went into the apartment, they all had the same reaction, which was, wow, it is so spacious, so airy, there's so much light. So you want to portray the apartment in that way when you're selling a property. Anyway, the photo on the left here is of the living room. The one in the middle is of the bathroom. Notice we have all the details with the little towels, the little bottles of toiletries, the planter here, and the photo on the right here is the office space within the bedroom, and this shows people how the space can be used, and it's very helpful. Let's move on to the next slide, the May Manhattan property market update. The first point is recession concerns. The job market is really hot. The consumer spending is very high. The oil prices are very high because of the war, and we have supply chain problems, which means that goods are taking longer to arrive and therefore prices are going up. So inflation was at 8.5% in March. That's the highest ever in 40 years. Therefore, the Federal Reserve is increasing interest rates, and the concern is that the interest rates are going to go up and it's going to pull back on the economy and therefore have a recession. So those are the people saying that there's going to be a recession, and then there are people who are saying that a recession wouldn't be likely, because for a recession to happen there has to be job losses, and with the way the labor market is going right now, it's less likely to have job losses, because right now companies are just hiring and there are not enough employees to fill the jobs. So anyway, I'm not a guy to predict, but I'm going to show you a chart that shows how Manhattan has performed, Manhattan real estate, during prior recessions. Strong buyer demand. This refers to the sale market. The supply is very low. It's still a seller's market, and the buyers are having a tough time looking for property because there's not enough supply, and buyers are still trying to lock in the still historically low interest rates in terms of mortgage rates. And the rents have been going up. The rental market is the hottest it has ever been, even relative to pre-pandemic, and that's resulting in high cap rates. That refers to the rental yields for the landlords. So it's a good time to be a landlord right now, especially if the landlord bought the property several years ago when prices were lower, because for our clients' apartments we have been increasing rents by anywhere from 25 to 50%. So this is the chart showing how Manhattan property has performed, and this is specific to condos during the three prior recessions. The circle on the left here was September 11, and the price per square foot didn't drop at all. The market stalled for about 4 weeks, but after that it was very robust. Then the prices went up until 2008, when the subprime crisis happened and Lehman collapsed. So the impact on Manhattan was delayed by 1 year. It hit the rest of the US in 2008, but only hit Manhattan in 2009, and it stretched out to 2010. So price per square foot here went down by about 15%, when rest of the US went down by about 35%. And then prices continue to go up until the prior peak of 2017. Here it was around 2200 per square foot, and then the market slowed from 2017 to 19, and the beginning of 2020 the activity was very strong, and we thought it was going to recover, but then COVID hit. So the market closed for 3 months, March to June of 2020, and here the decrease in price of 2021. Q1 of 2021 was the lowest in terms of the price per square foot, because it reflected a lot of deals from late 2020. But from beginning of 2021 until the end of 2021 and stretching into 2022, prices have been going up. So you can see here the prices went back up in Q1 of 2022, but it's still lower than the 2017 level. So if you look at the trend, it goes up for several years, it comes down for about 2 years, and then it goes up for several years. That's why we are predicting the prices to go up, as denoted by the dotted green line here. This is the Manhattan rental report, and rents have just been increasing and inventory has been decreasing. The average rental price was up 32% versus a year ago. Rental price per square foot up 25%. And this one is number of new leases. Number of new leases that was signed. It was higher than last month but lower than a year ago. And this is the inventory, 4709, and that's 77% lower than a year ago. The peak was in late 2020 when it was about 15,000 units, so right now it's about 1/3 of that. And the vacancy rate as of April was 1.55%. 1 year ago it was more than 11%. So this table shows what a strong rental market we are in right now. And this is a brief bio of myself. Thank you for watching.